The broadcast is now starting. All attendees are in listen-only mode.
All right, everybody, welcome to today's webinar with One Resource Group. My name is Jacob Locke, Director of Marketing here over at ORG. Today, I'm really excited for our call. We have our good partners over at North American with Steve and Troy on the call here. They're going to be going over how to start winning in advanced markets with North American. Troy, Steve, I really appreciate your guys' time and hopping on here. Both of you guys are looking great. We're excited for the webinar. A couple housekeeping items. If you have any questions throughout the webinar, feel free to submit them and we'll address them towards the end. Past that, I'll swing it over to you guys. Let's get rocking and rolling.
Hey, Jacob, thank you. Hey, man, it is so awesome to be here with you guys. I'm Steve Zimmerman. My handsome wingman is Troy Hammond. We are thrilled to be one of the longtime partners with One Resource Group. We are going to spend a little time today talking about advanced markets, things you can do, success stories on cases, and we're going to walk you through a fairly fast-paced agenda. So, Troy, why don't I toss to you, my man? You might have some opening comments to kick things off.
Oh, thanks, my man. Appreciate it. Good seeing everybody. And, the concepts we're bringing today, winning in advanced markets, hit it out of the park. We'll talk about ringing the cash register. That really resonates because these concepts we talk about, this is where a lot of our large cases are coming from. We had an agent write a couple last year, and he goes, that changed my life. I won't go over the targets or commissions, but his client, his business owner got taken care of from a life insurance perspective, but he also made the most money he's ever made. So think about that. We're satisfying clients' needs, business owners' needs with these concepts we'll share with you today, but also a lot of these are game-changing cases for us advisors. So couldn't be more excited to be on with you, Zim. Thanks, Jacob.
Hey, thanks. All right, so let's get going. Let's establish some ground rules. I got two things we'd love for you to do today. Number one, let's focus on first things first. We are here to help you do business. Troy and I want to help you ring your cash register, and we want to help you make a little bit of money. Serve your clients, of course, but we're here to help you do some business. The second thing is, please write down names. Write down names of clients and prospects as we're going through this material, because you'll be receiving some follow-up information from us, the recording of this, but you'll also be receiving some contacts and follow-ups from your One Resource Group marketer. So let's put this time to use. I mean, the best thing we could do is make this half hour or so a good investment in your time. So any of you guys that are kind of from my generation, Glenn Gary, Glenn Ross, always be closing. So let's write those names down. So Troy, let's get at it. So let's take a look at the first sales idea. We've got 4 different sales ideas for you today. So we're going to move fairly quickly through some of these ideas. My hope is that some of them appeal to you more than others. Jot down those names. So the first thing we're going to do is we're going to look at the Tax Cuts and Jobs Act sunset. And what the heck is going on here? So this is the changing of the legislation that's happening at the end of 2025. We're going to revert back to what was in force prior to the Trump Tax Act, basically. And what's going to happen? The tax rates are going to go up. Standard deduction is going to actually go down. Personal exemptions are coming back. SALT, state and local tax deductions coming way down. Going way up. Because if you're in a high tax state, like I'm in Connecticut, any place where you got high taxes, we're capped out at $10,000 of deductions. We've gotten crushed here. But for a lot of people, this really has not been that big of a deal. So the estate and gift tax exemptions, that's what's the big change. That's really why we're here to talk about the sales idea for a few minutes. Here's a couple of the other things. I actually put them in a smaller font just because I wanted you to realize they're there, but they're really not things that people are really spending as much time on. So in general, after 2025, the sunset, which is basically means is tax rates are probably going up. Exemption amounts for estate and transfer taxes are going to go down. And you see here, the current exemption amount for estate tax and gifting in 2024 is $13.61 million per person. That's over 27.2 million per couple right now. That's going to go up next year in 2025, but it's going to revert back to $5 million adjusted for inflation in 2026. probably going to be around 6 or 7 million per person. But you see there, we have an enormous amount of exemption that we have clients getting money out of their estates, leveraging that limited time opportunity. That's where the gifting's coming in. So why don't we give us something fresh here, Troy? If we look at, the traditional approach to estate planning, Troy's been doing this for a long time. Think about how you've designed cases over the years. If we're doing gifting, we're doing our crummy letters. We would typically do gifting. We would put it into just a plain vanilla, irrevocable life insurance trust on ILIT. We would also typically over the years have used a guaranteed death benefit life product. Really, there was never a whole lot of need or focus on cash value. So what do you see here? You see really solid estate planning. You see very little benefit. There's really nothing in it, or no residual benefit or ability to pull money back on the part of the grantor client or grantor parent. So if we had a new way to look at this for 2024, what if we told you we had a way for you to accomplish your estate planning goals, but still retain access to trust assets? You might say, hey, look, that sounds too good to be true. Guys, you got to prove that one to me. So let's do this. Let's look at a new kind of trust, and let's look at a different kind of life insurance. So the first one, we're going to still use an ILIT, but we're going to use a spousal lifetime access trust. This is a specially designed trust where we would actually put one trust on the books on the husband, one trust on the books on the wife. The other spouse is the beneficiary. In a SLAT, you can actually have the trustee pull assets out of the trust for the benefit of the beneficiary spouse. So we won't go too deep there. If that's something that interests you, we can actually walk through cases with you. We can work on this. We can show you how it works. Okay. There's also been an evolution with life insurance products that you can use a guaranteed death benefit contract that will actually build cash value and have a contractually guaranteed return of premium feature. Really what we're doing there is we're not sacrificing premium competitiveness or pricing competitiveness to produce that liquidity, but you get both. So what we're doing here is we're buying the policy and the trust for death benefit. If the client has a need earlier on, that's kind of the priority at that point. We've got the ability for that life policy to produce cash value or liquidity that you never really had before. So a quick note on taxation. Trusts are not a great place to hold assets that will be generating taxable income. Trust you see here at a little bit over $15,000 a year, trusts reach maximum income tax brackets for income and cap gains. So that's why also life insurance, in addition to the leverage of the death benefit, is a very attractive tool because it doesn't generate taxable income in most cases. All right. Hey, Troy, let's walk them through. Maybe I could just let you comment on this. The best thing we could do is give you an example. So let's give you a little case study. Let's show you how this works. Could you just walk them through this, Troy?
Yeah, and before I start too on this one, Zim, is, you talked about living benefits, new versus old life insurance. We talk about that a lot with our term life insurance, where a lot of these concepts start, but asking those clients, hey, do you have life insurance? Number one, if you do you have the new or the old kind, right? And the new life insurance is these policies, not only where you can access it tax-free with living benefits, chronic, critical, terminal, but also a lot of these designs we can take tax-free loans. But those living benefits, man, those are a really good talking point on new versus old. So in this situation, we've got, kind of a gifting case study, right? Zim, 60-year-old female, good health. What a lot of the concerns on policies is she's got $1 million lump sum, right? Well, if we put that into the product, we know with corridor factors, it's going to require a very high death benefit, which is probably over, above, and beyond what we need. So what we utilize in this is a PDA, we call it, our premium deposit agreement account. So simply put, we're putting that money in anywhere from 3 to 10 years. That policy will automatically be paid internally. That money sitting in the account prior to getting deposited into the policy will get guaranteed interest. Our rate right now is 4%. We're soon increasing that on new products that we'll be launching in the next 3 to 4 to 5 months. That'll be increased to 5%. So really neat concept. Put that money in the PDA. So in what we'll pull up the illustration, what we're going to be seeing is a death benefit around 3.5 million. We're guaranteeing it to 100. We can guarantee it all the way to 120 still, folks, if you want to, or as low as 81. So the client question, right, Zim, is life insurance the best way to go after we present this? And I'll let you take over on the next slide.
Okay, thanks. Hey guys, so just think about this. We've got a client, say they're worth $5 or $10 million, maybe more. They're going to say, let's take $1 million and let's gift this money. Let's get out of my estate and take advantage of this. Now, gifting does two things. It gets that $1 million out of their estate, but it also gets the future appreciation of that asset out of their estate. So what we're doing here is, as Troy said, we're going to put $1 million into the policy, but we're actually going to put it into a premium deposit account. So we can guarantee, and we'll show you this here, we can guarantee $3.59 million of death benefit. You're probably thinking, well, so is that good? Is that bad? A lot of successful and smart clients typically say, look, is life insurance the best way to go? Should we just invest this? So the next thing we want to show you is we're going to help you understand and quantify, hey, is life insurance better? Is life insurance not better? So here we will send you this. I just wanted you to see here, here's our guaranteed death benefit product. It's called Protection Builder. You see the $118,000 going in a year. That's because we're earning interest on the premium deposit account. $3.5 million of guaranteed death benefit across the board. And these circles on the bottom is the cash value and the contractually guaranteed return of premium. So the primary goal here is to get the money out of the estate. These are dollars that the client really doesn't need to live on. But if something crazy happens, they would have the ability to have the trustee take distributions out of this policy and make distributions out of the trust for the benefit of that beneficiary spouse. So not a likely scenario, but it gives clients great comfort knowing that their plan is flexible. So the next thing I want to show you is, if we're sitting down, years ago, I had somebody, teach me how to do this. Some of the smartest people that we know that do this stuff, they take very complicated things and they explain it just in English. So the back of the napkin, the legal pad presentation, I would love to do here for this client. You see that 45-degree angle line, that's if we invest money in the trust. The life insurance line is the death benefit. You see those two vertical lines, life expectancy and crossover. At life expectancy, and that's mid-80s, probably 83, 84, the death benefit's way more. It takes you until the mid-90s, probably age 94, for the account value, if you invest the money, to be more than the death benefit. So what we're just showing you here is, for pure benefit later on for the clients and the beneficiaries in the trust, it's hard to beat what the life insurance death benefit can be. So, my wife would just be like, hey, where do I sign? This is great. Troy might be a little bit more cynical, like, yo, Zimbo, slow down. You got to prove this to me. It's a nice chart, but, can you prove it to me? So we have a program. And Troy, I'm going to ask you just to make a couple comments on this. We won't walk you through all these pages. We'll send this out. But Troy, explain to them what this is and how this can help them.
This program's called InsMark, and the big thing with it, it's a fairly spendy program. I mean, for the minimal subscription, it's about $1,000 a month, guys and gals. But with your contract with One Resource Group, you're going to get this free of charge. So either we can help you, we can do some training, I can take over on that, or once you get accustomed to it, this is some stuff we can do. And Zimmy's got it circled here. Life expectancy, 83 years old. That AUM account, that taxable investment's got $2.3 million in it. We've got a death benefit still of over $3.5 million in great cash. So this product, we can design it where we can compare it to any taxable investment vehicle, a CD, a money market. There's so many things you can do with InsMark, and it's free of charge for you being with One Resource Group and partnering with them. So we use it a lot on this concept, right, Steve? And then we also use it on LERP type sales where we're pulling out distributions, and you can see after a taxable event each year on that left column, you'll see that the premium or what's available really go down in comparison to where the life insurance is, especially from a tax advantage. And hey, that's the beauty of life insurance, right? Is a tax advantage. Life insurance isn't what it was years ago where, hey, in order for life insurance to benefit me, I've got to die and my wife takes over, my kids take over. New versus old. It's so advantageous. And then when you can bring a program and put everything down on paper so a client can view it, I think it's really powerful, Steve.
Hey, thanks, Troy. Hey, so guys, just to summarize this, and we'll keep moving. The InsMark program is a way that you can take the life insurance values, that's column 5 through 8 on the right-hand side of your screen. That's the life insurance illustration. When clients are saying, hey, am I better off doing other things with my money? If I'm saving for retirement, if I'm doing this leverage gifting in a trust, columns 1 through 4 are simulating the cash flow, the invested amounts in other places. It's totally flexible. So just know we can do this modeling for you in an infinite number of ways. It's a very compelling tool. So let's keep going. And let's close out our first sales idea with maybe some basic comments here. We're talking about the leverage gifting, the sunset. Troy and I talk to a lot of folks, and we get a very common answer of, hey man, how many clients are really going to do all this gifting? It's going to be a pretty high net worth client. A lot of people aren't going to be doing this. You know what? You're probably right. So think of 10-6-3. If you talk to 10 high net worth clients, maybe 3 times they might want to do some gifting. But 6 times out of that 10, you're going to uncover other situations, other client needs. You're going to do things that are going to put other aspects of that client relationship in motion for you to do business. And 10 out of 10 times, you're going to deepen the relationship. You're going to learn more about the family. You're going to create a bridge to the next generation for managing those assets. So the 2025 sunset conversation really is, it's a tool to get some of your best clients and prospects to engage with you in a meaningful conversation. You may do gifting. Hey, you may have business owners. You may get into business owner type of planning, which we're going to hit next. You may get into charitable planning. So really, the takeaway here is jot down names of clients or prospects that would be interested to learn what this 2025 sunset's all about. And then you can take that conversation in a number of different directions that does business. All right, let's get into number 2, Troy. Executive benefits. So what we're talking about here is we're talking about small to medium-sized companies. We're talking about that business owner that says, hey, Troy's my right-hand man. He's been with me for years. I would be screwed if I lost this guy. He's my rainmaker. And a lot of employees at the same time, there has been a real exodus of quality talent because people feel like that they're in the driver's seat. People are leaving jobs because they think they can do better. They think they can make more money. People think they'll be moved to a better place if they change jobs. So what we have here is if you have clients or prospects that are business owners, if they want to do something for that key person to retain them, or heck, what if we got a business where, you have 2 or 3 owners? I want to do something for us. I don't want to do something like the qualified plan where I have to do something for everybody. So executive compensation strategies are things we could do for the business owner, fully discriminatory, or we can do some things to help you retain your best talent. So you want to go to your clients and prospects here with these kinds of conversations. You want them to think you're the thought leader. Now, if you're not talking about this, there's a really good chance you're probably going to be outside looking in. So it's a question of which one of these do you want to be. So, hey, I know we're probably talking to people from all around the country, the nature of the reach of One Resource Group. But T-Man, who are we looking at here? Why is he smiling?
Mr. Jim Harbaugh smiling. Not only did he win a national championship, and as a Niners fan, I wish he would have won a Super Bowl when he was with the Niners, but he had what's called a split dollar behind the scenes with Michigan, and it's a great way to get him paid. And I think at the end of the day, the structure worked well for both sides of the house, Michigan as well as him. And I think that's the main reason he's smiling. It's almost like July 1st when Bobby Bonilla gets his check from the Mets off that tax-deferred annuity, man. Life insurance is really a neat way to do it, and you see it a lot in sports. I love the Jim Harbaugh picture.
Yeah, thanks. Hey, thanks, Troy. And this was a 7-year premium payment schedule, $2 million a year. This was a few years ago. At the time when Michigan put this agreement in place, it was a split dollar life insurance plan. As Troy mentioned, this made Harbaugh the highest paid coach in the NCAA. Since then, many other teams and many other sports franchises have started to do this. We see this all the time. So a great conversation starter here might be, hey, you're familiar with Jim Harbaugh, Chargers. Hey, did you know there's also an aspect of a life insurance plan here? So it's just a cool way to start the conversation. So a couple of different paths you can go down. You can go down the executive bonus path. This would be a situation where if it's a C corporation, it's a taxable payment that the company can make. It's a bonus you would make to the executive. It's a very effective way to retain your best employees. A split dollar plan takes that same logic a little bit further, though. In a split dollar plan, that's a way where we're literally taking the money, splitting it into the benefit of the employee and the benefit for the employer. In a split dollar structure, the employer is losing time value of money or access to the money for a period of time, but they're going to get their premium payments back eventually. So it's a pretty cool way where the business can do something really meaningful for the employee and get their money back later. So you'll hear, like I love to hear the term, if you can't get deductibility, get cost recovery. So split dollar is something we do an awful lot, and the crew at One Resource Group does. And Troy and I are intentionally today not talking a lot about product. I think number one, that might bore you a little bit. Just know that we've got really great products and underwriting and marketing resources that back up all these different sales ideas. We thought our time would be best spent today just talking about like planning concepts and things like that. So we have a ton of materials. We've got case studies, we got white papers, we have all kinds of stuff. We can, in our follow-up, we'll send you this link. This is to our marketing hub. There's tons of stuff. We have client-approved materials. We have stuff for you guys on this call too. So, what do you think, Troy? Should we go to number 3?
Let's go to number 3.
All right, door number 3. Let's keep it going. So, more business owner content. Let's talk about business continuation planning. Let's talk about buy-sell agreements. Now, some of you that may have been in the business for a while, like, dude, I know that buy-sell stuff. If you're a financial advisor, if you dabble in insurance, a buy-sell plan is not only a great business planning approach for some of your higher-end clients, it's a really good conversation starter for prospecting, to get in the door and to get new business owner clients. So let's just give you, and what we'll do here, Troy and I will give you a few conversation starters. We'll give you questions to ask. We'll tell you how to take kind of a vanilla planning concept like a buy-sell and turn this into an action-oriented business tool for you to get some new clients. So first things first, 30% of family-owned businesses make it from generation 1 to generation 2. 12% make it to generation 3. So right off the bat, we've got some things here that if you've got some business owners, you want to go back and have more of a conversation to go deeper in the relationship, or heck, what do you got? You have some business owner prospects. Here's the way to get them in the door with you. So let us walk you through a little case study. This actually is a situation I was personally familiar with. It's a family that owned a large car dealership. Mom and dad owned the business. They were in their 60s. The kids, generation 2, the kids were in the business. The son was the CFO. That was obviously what they did. The family viewed it as kind of like that was the thing for the kids to take over and run eventually. So unfortunately, the dad, sudden heart attack in his late 60s, no buy-sell, no insurance. So what happened? Mom and dad had the typical I love you will. Mom inherited everything. So the next thing you know, after dad's gone, after they got through this just shock of everything, mom is sitting in the office in the corner. She owns it now. Mom has no interest in this business. Mom sold out to the competitor down the street, their big competitor rival. The competitor came in and said, hey, look, love the place. I like your desk in the corner office, but kids, I don't need you. So don't let the door hit you, where on the way out. So here was a situation where the kids, generation 2, were all of a sudden, in a blink of an eye, out looking for new jobs. So the son that was the CFO, kids in college, driving 2 hours to a new job he just didn't like and making less money. So you see here, had they had a buy-sell, had they had life insurance backing it up, that family still could own the business, and it was an avoidable occurrence. So how can you use this now? Let's come back to your toolkit. How can you use this to open the door with business owner clients? So very simple. And I would say if you're at the country club playing golf with somebody, you're at the the Rotary meeting, you're seeing somebody, very non-threatening. I would just say, hey Troy, you got this big business here, the machine shop, the factory. Hey, do you have a buy-sell? And first thing you might say is, no, I don't. Well, the easiest thing I would say then is, hey, I don't know if you need one, but you sure as heck do need to know what it is. You need to know what it could do for you. and you need to know what the implications are if you don't have one. Now, I would say, if you ask a successful business owner, do you have a buy-sell? What's going to happen, Troy? They're going to probably go like, you're going to get the Heisman, right? They're going to be like, oh, they're going to be like, hey, I'm all set. You know, it's like, whether they're all set or not, they're probably going to say that. So if they are all set, hey, yeah, I got one, I'm good. Well, then what I would just say here is, hey, can I ask you just a couple other questions? And now I'm going down the path of buy-sell review, buy-sell arrangement review, policy review. So when was it put in place? Could it possibly be time for a review? If the buy-sell is within 2 or 3 years old, you know, it's probably pretty good. If the buy-sell and if they put insurance in place is older than 4 or 5 years, it's a no-brainer. It's a slam dunk. You got to review this thing. Questions you need to address when looking at the buy-sell. Has the value of the business changed? Have the owners changed? Did you put life insurance in place? If somebody puts a buy-sell agreement in place and doesn't put a life insurance policy in conjunction with it, that's just as problematic. So the thing here we want to do is we just want to say, if you've got that buy-sell, here are the questions you need to ask. What we really want to have is we want the client to get out that old buy-sell, kind of dust it off and take a look and see if that needs to be revised. And it's a policy review situation for you guys. Troy, any comments there?
Yeah, dust off those old policies, right? Get an in-force illustration. They're very easy to get with most companies, including us. If that's the big thing, and that's where a lot of our cases are coming from a basic conceptual, is that policy review. Looking at those, because there's unfortunately a lot of policies. Number one, there's policies even as short as 4 or 5 years ago that don't have the living benefits, chronic, critical, terminal, right? So doing those reviews, there's so many things that might have changed from a policy you wrote 10 years ago, 15 years ago, right? They might have grandkids right now. They might not have told you. I think we're guilty as advisors and agents of not reviewing policies. Once we sell it, it kind of goes off to the side. So that is really one opportunity, is to review in-force illustrations with clients to make sure it satisfies their current needs. It might 10, 15 years ago, but it might not satisfy their needs, like Steve mentioned, those different changes in their lifestyle. Also, performance of the policy. Has it performed the way you illustrated it 10, 15, 20 years ago? So with the products we talk about too, guys, with the current interest rate environment, we doubled, quadrupled a lot of our premium limits on our products. So we're seeing a lot of large 1035s that are 10 plus years old coming in. If you can benefit the client, it's definitely something to look at. Again, new versus old life insurance, right, Zim?
Yeah. Hey, great comment there. We'll come back to that in a second. This is my favorite question. So, hey, we've got something so new, so cool, it didn't even make the slide deck. Hey, okay, we're talking about buy-sells. We're talking about businesses. How about business valuations? If you got a business owner, client, or prospect, if they're going to put a buy-sell in place, if they don't have a valuation on the business, they probably need to do that. We have just rolled out a new business valuation service that we're only giving to a few of our biggest and best relationships, like One Resource Group. It's a company called Marshall & Stevens. They've been in the business for about 90 years. All they do is business valuations. A few life carriers will provide business valuations to you, but what they typically do is they get some data, they plug it into a form, it comes out on the carrier's letterhead, and it's what they use. We believe that we have a better way to do this because it's a third-party resource. It's on their paper. They will actually get on the phone with you and with your business owner client and walk you through this. There's a few parameters on this. The business has to be a certain size, and we actually pay for that business valuation. And it's like 10 or 15 grand. We're paying for those if you have some of these cases. So, and there's certain situations we do this, there's certain situations that it works. What I would recommend is, if this is starting to work for you, if you're thinking, hey, buy-sell could be a cool thing, or if you do that now, if you'd like to dig into the details on that Marshall & Stevens business valuation, give us a call, give your org marketer a call. We'll walk you through, where it fits in and how it works. All right. Troy, number 4. What do you say?
Number 4, final 4.
Let's go through these last few things. Let's ring the cash register. Remember, always be closing. Any of you guys, if you ever saw Glengarry, Glen Ross, remember there's a sales contest. First prize is a Cadillac. Second prize is a set of steak knives, and I'll stop right there. So And some of you guys that are younger and like, you just, what is he talking about? So ask your parents. So sales ideas, bonus content here. Do you have company-owned life policies? Troy, I'm going to toss you this, and then I'm going to lob this ball over the plate. Could you just talk about policy review and some of the success we've had?
Yeah, that was one of our larger cases last year. We had I think it was an 7 or 8 pay of 800,000 premium from an underperforming policy. So the clients, I think they're like 72 years old, older policy, moved it over, did a 7 pay of 800,000, had some 1035 money in there. And at the end of the day, it was a huge benefit to the client. Number one, it's all for the client. Can we improve that old policy? That situation, like many, we were able to. That case was that agent's largest case of last year. So he thanked us, got it through underwriting. But I mean, that's the big thing, Zimmy, is looking at some of these older policies. There's so much opportunity, even if you weren't the writing advisor on them. If you have been in this business for years, you're sitting on the gold mine. Go back to some of those old policies, right? Take a look at them, see if they're performing. I almost guarantee you something has changed in the client's family or their life that policy might not be up to par for them right now. And then the living benefits, you know, like Zim said, we're not going to talk a lot of products today at all, probably, but the living benefits, the CCT, critical, chronic, terminal, typically are going to be automatic on these policies upfront, no additional costs. So a lot of the times we can benefit a client from moving that old policy into a newer one. New versus old. I'm getting sick of saying it, but we live with it.
Hey, I love it. Hey, great, thanks. Hey, I'm just gonna I'm gonna emphasize a couple things Troy said. You know, the best question, if you lead with one thing, asking people, do you have life insurance? Well, yeah, I'm all set. Remember that thing? Like, yep, I'm good. Hey, let me ask you one last question. Do you have the new or old kind of life insurance? And that's they're probably gonna look at you and say, well, okay, I don't know. What's the difference? The new kind of life insurance is the kind you don't have to die to get money out of, living benefits. So this policy was one we wrote last year. It was a business owner that took out a huge policy. He bought the policy through his property casualty company. And if any of you are affiliated with property casualty companies, you know that a P&C agent needs to sell enough of their own home team's product to qualify for certain kind of benefits. That's okay. There's nothing wrong with that. A lot of times, though, property casualty companies' life policies aren't quite as strong as far as pricing and benefits as the things you have available here at One Resource Group. So we went back to the client. Do you have the old or new kind? We looked at it. As Troy said, it was a $15 million policy, and he said $800,000 of premium. So I'm going to just stop. I'm going to underscore that. $800,000 of premium every year for 15 years. So that's target premium. You guys get paid in target premium. That's a pretty good day. So granted, we don't do those all the time, but they are out there. And so ask people if you have policies, can review them. All right, number two, here's a question. I'm pulling a pretty obscure section of the tax code out, but you'll see why this is a very compelling thing to use. This is a conversation starter. This is another way to get business owner prospects to engage with you. Get you in the door. You can talk about anything else you want to talk about when you're there too. Okay, Section 101J. The question is, do you have business-owned policies? Do you have business-owned policies on the life of any of your employees that benefits the company? A lot of people are going to say yes. Are you compliant with Section 101J of the tax code? That's when they're going to put their arms up and go, I don't know. I have no idea. They're also going to say, I don't even know what it is. So let me give you 30 seconds. Why do you care? What is 101J? Section 101J was born in 2006. It was part of the Pension Protection Act of 2006. Prior to this, Walmart was putting life insurance policies on rank and file employees, but wasn't telling them that the policies were there for the benefit of Walmart. You could imagine those employees were not too happy. So what happened here after 2006, this Section 101J said, companies that are putting policies on force on the life of employees for the benefit of the company, there has to be an acknowledgement. The employee that's being covered has to sign off consenting to it. If those consent documents are not in good order, the death benefit is taxable. So any policies written after August of 2006 that do not have your disclosures and your annual reporting that's up to speed by the IRS standards risk having the death benefit be taxable. So here, where am I going? Bottom line, if a company has policies and they're not compliant with 101J, we got an issue. So you go back to your business owner. Are you compliant? It's a review situation. And I hate to tell you, Troy, if the only fix is to rewrite them. So I was a little bit long-winded there, but if you want to come back to us, you can there. Hey, the last two things very quickly, liquid asset management. Troy, you want to just, I'm going to toss to you. I'm doing a lot of the talking here. Maybe you just give them like high level on the liquidity, the enhanced liquidity we have, and how that might work here in this situation.
Yeah, and we looked at it too. On the protection builder, we talked about that ROP feature, which salespeople call the return of premium. It's called the premium recovery. Simple. If you have $1 million policy, instead of writing one GIUL for $1 million, maybe write two of them for $500,000. That way you have one on the side and say, hey, if I ever do need the money, I've got this one where I know I'm gonna surrender it, but I also have that other one in force. And hey, if you want to take them both, go ahead. But diversification within company products is something we allow. We'd allow four of those too, Zim, if they want to do 250. So liquid asset management is a big thing, especially on that product we talked about. We also have an early cash value product. We won't get into that really today. Our new product being launched this fall, I believe we're going to have an early cash value rider on it. So that's really, I think, where the industry is going, is people requiring possibly some of their assets, and they need to be liquid in the life insurance contracts. And us, like a few other companies, are really taking note of that, and we're putting those design features into our product. So hopefully I hit everything you wanted there, Zim, on number 3. I'm sure I missed something, so I'll kick it back to you.
No, that is perfect. Thank you. Yeah, hey, just the takeaway on the liquid asset management, we have an unusually liquid product that has no surrender charges. So, if you've got a client that wants benefits of insurance but doesn't want to tie their money up, we've got something that's pretty different there. Hey, and then last thing, I'll just wrap up with number 4. If any of you sell long-term care solutions to your client, have you ever had a decline? And the answer is yes. I mean, we get that all the time. So I just want to plant a seed with you here. If you have long-term care needs, if you're either selling traditional long-term care, or you might be selling life insurance policies with riders or linked benefit long-term care solutions, there's morbidity and mortality underwriting. The morbidity underwriting is what gets people kicked out. We have a solution where we can get clients the leverage and the coverage for the chronic and the long-term care, where we just do the mortality underwriting. So I'm going to stop there. Keep that in mind. If you have long-term care underwriting frustrations, give your org marketer a call, give us a call. So why don't we just start wrapping up, Troy? So if we just walk through, I hope you're writing down some names of clients and prospects. We started with the 2025 sunset, the gifting opportunity. That's way broader than that, because you can use that as a conversation starter with some of your biggest clients. On the business side, we can work with the executive compensation area. And if that's something, if you've like the I got a guy conversation, give us a call. We can walk you through how the case design or how the planning applications work. The business continuation of business continuity plans, the buy sells, and then even some of these other things. Just be thinking about that. So write down 3 names. You're going to hear from us in follow-up. We will help you with case design. We work very closely with the team at One Resource Group. Call them, call us. We're good. We kind of think of us as part of their team. And that is it. So that's our contact info. Troy, I'll let you make any other comments you'd like.
Yeah, no, again, thank you. Thanks, Jacob, for having this, setting it up. And Zim, I had fun. I hope you did too. Again, if anybody has any questions, I'm the internal, so you can start with me from an advanced case design or any illustrations. The org team's the best in the business, so they probably got you covered, but I just want to throw that out there. You have access to us as well if ever desired. Again, we didn't go over products today. That was our goal. So if you have any detailed questions on products, just a reminder, North American, strong ratings. Something that helps us stand apart from the competitors is we are an employee-owned company. We have an ESOP, so Zim and I are owners of the company. Very little, but heck, we are a little bit. So we're very proud of that, our ownership structure, and Can't thank you for the business. If you haven't given us a shot, please do. We'd love to earn your business. Steve, Jacob, Steve, I'll kick it over to you and have
Yeah.
Jacob close out, I'm assuming.
Yeah, I mean, yeah, real
Hey.
quick here. Sorry, Steve, go ahead.
No, I was just going to say, Jacob, you take it back, brother, because Troy, you did a nice job wrapping up. I can't add anything to that.
Yeah, no, I mean, you guys both did an awesome job as always. I mean, we have a few questions here. I guess I'll leave my 2 cents before start firing those away. I will say,
Sure.
I think it's, the do you have new or old life, the new or old life insurance is probably one of my favorite lines in the industry, is because it's easy. I mean, if I'm being transparent, I got licensed 2.5 years ago. First thing when I got licensed, I text my dad. I was like, "Hey, do you have the new or old life insurance?" He's like, "What?" And so it's an easy conversation starter, which is what I'm saying. It's a great idea. As far as some questions go here, we have a few, and I'll be quick. We went a little over time, but first question here says, how does North American stack up on pricing when it comes to a buy-sell?
Hey, let me make a quick comment there, and then Troy, you might have something to add. Such a great question. Thank you. So we're going to stack up extremely well. If you're going to do a buy-sell, you're either going to use a term product or you're going to use a permanent contract. Oftentimes, the buy-sell starts with a term policy. What I would recommend there is we'd love to have a conversation with you because we're one of a small number of life carriers that have living benefits on the term insurance. Our term insurance is probably about 5, 6, 7% more than your cheapest no-frills term policy. It gives you accelerated death benefit for things like critical illness and other things like that. Very helpful for a business owner to have an infusion of capital pre-death. We also have some of the best conversion features in the industry there too. So if they say, I'll start with term and convert, it works very well both there. And then on the permanent side, our product works really well for a lot of the same reasons. That's the products we showed you in the estate planning situation. But thank you for the question. We'll prove it to you. We can do side-by-side stuff with the org guys, but products look good.
Absolutely. No, I agree with you. And another question here, agent is saying, interested to hear more on the early cash value product.
Yep.
Any comment there?
We can send a follow-up. That product is called the Smart Builder, and we just relaunched it. We're in the middle of an exciting time, guys, at North American and Salmons Financial on redoing all of our products, repricing for the better. So the Smart Builder is the name of that one. We'll send that over to you, and then if the agent wants to reach out to us directly, I'd be happy to have a call with him or her as well. But the Smart Builder 3 is that product, so we can go over that in detail on a different call.
Absolutely.
Yeah. Hey, thanks, Troy. Hey, Jacob, one thing I'd add there on the high early cash product, we use it with retired clients that want to do some things to leverage up some of their money on the sideline, their safe money, to get the LTC benefit and the liquidity features. We see it used in the business markets. So there's a whole host of things that we can help you with there. And again, it's kind of a business development tool. Thanks, Jacob.
Yeah, absolutely. Look, we have a handful of questions. I have to hop on another call. We'll answer one or two of them. I'll be sure to address the others. Another question here. This one's easy. Can Jacob or someone send me information? Yes, one of us will. One of us will cover it. Let's see here. Last question is, I guess this is kind of plays into the the pricing on the buy sell question, which is why would I sell North American over a cheaper or more cost effective carrier like a Banner or a Corebridge? I mean, it's pretty much the same story. Am I right?
Yeah. Hey, and same story. What I'd recommend is let's chat about it. Let's put things side by side. We'll explain the differences. I would go into the sale with the client, put both of them on the table, because you put Banner on the table, you put us on the table. The client's like, why are you showing me two? The North American is a few bucks a month more, and you get a lot more. But I would go in with both just to make sure I close the deal.
Absolutely. Cool. Well, hey, I gotta hop off. Any final remarks for our audience before we leave?
We'd love to work with you. Give us a call. We'll be in touch or respond to the emails. But guys, thank you. You're in a place with the winners at ORG. We're pumped to be here. Thanks.
Awesome. No, I appreciate you guys' time. I appreciate everybody hopping on the call here. I believe next week is the 4th of July. So we will actually not be having a webinar. So let this call sink in, get a copy of the replay, study it. I mean, this is really valuable information. Really, really appreciate to have Steve and Troy's time. So if anybody has any questions, you can reach out to me directly, or you can reach out to North American. We'll get you taken care of. But once again, thank you guys. I hope everybody has a great week. Thank you.